It's the market sniper. Yes, Francis Hunt coming at you on precious metals. You haven't heard on precious metals in a while. Unfortunately, the news is not particularly good. What are we looking at here? We're looking at the silver futures. So I'll start with silver. God market is, of course, gold. So we will make a turn by gold. Of course. This particular chart was taken, and he highlights 2021 12. That was December 09, the 9th of December. So that's roughly there. And we were speculating on the key heavy level in and around the 22. That's the blue line over here that we just couldn't get away. We'll go up to a bigger time frame. This time frame is the 4 hour for now. We'll show you on the bigger why there are concerns for precious metals. There is something brewing, and it isn't good. It isn't good. I am a long-term macro bull, but more and more I feel the reward for you comes post-reset Bretton Woods moment, and for all we know, it may no longer be even legal to hold. They will try frustrate you out. Anything you do that is designed to defend your wealth is something they wish to attack. They want you to be hollowed out and own nothing after all their various pump and dump schemes and various debt jubilees and future UBI systems. So let's have a look at the scenario. Why do we scenario cost? This is something we do in a community to understand if we are got the current read right. So what we do is we speculate on where something might go, so that if it walks our way, when we revisit it later on, that we can then see that yes, our view is holding, or no, in actual fact, we have to look at a different scenario. So just prior to this, we felt maybe there's a falling wedge and it'll break up. It did actually go up out of that falling wedge. The falling wedge was to the left here, but then it came heavily back down. We abandoned the previous scenario and we hold up a new one. Too much weight pulling the silver down to the 22 level. So what's happened to silver since this particular draw? That was in 21, beginning of December. So we are now in February. Can you believe it? It's already February. Let's have a look at it. This is where we are. So where you were looking was over here on the orange point, where we were saying there will be another rally. We were pointing to a rally and then a hard sell-off. A rally and a hard sell-off. You've just seen it. I can do it on the same time frame for you. We're on the 2-day now. So let's take you into the 4 hour first so that you can see it like for like. Now we have moved on. We have moved on from that moment over there, the 9th, roughly there. And what did you get? You got this weak limping upside with a final blow-off where you melted up for a certain degree, you ran the 24, and then you came almost as fast back down. I would argue even faster. Look at that squeezy Japanesey there, right by the 24 on the small time frame, down, grind line, and there you have it. Rising wedge, and you're back at the 22. Why can't we escape? That is the big question you should be asking. You can't escape to the upside. Man, you're getting people, you're getting the environment full of inflation. None of them can cancel or cure the inflation. They don't have enough room. They won't be able to go high enough in rates. Gold and silver should be absolutely throwing it up. And what are you actually getting? You're getting negative ECB bonds now turning positive again, and metals selling off. So that guaranteed can't fail debt of the German Bund, talk about guaranteed never can fail, about as frail a comment as possible. I'd rather have Apple debt than that. But anyway, so guaranteed debt can't fail. You pay to get most of your money back later. You get a negative interest rate. They've all ticked positive at the moment. So now that's another reason for selling of metals. Metals that you hold in your hand cannot disappear unless they've been stolen from you. Metals have a small amount of carry cost for those that are vaulting, but when you had a negative yielding bond, it depends which one do you think will still be there, which one will hold its value better. I know which ones I would take, and we are long-term metal hodlers, holders and stackers. But short-term paper market, remember, I consider these markets to be manipulated like most markets, and I've spoken before of a number of speculations, a little bit of spitballing on my behalf in terms of how and why the metals are down so low and the bond markets kept high with this unendless supply for so long. And I think there is a narrative behind it. You'll see it in another video. I'm giving you a short technical take though. So the bigger time frame view on the daily, What could be an additional risk, pattern within pattern, is that you could have a left shoulder here, you could have a higher high for a head there, complex head, and then a down. I am seeing repeated signs of deflationary events, collapse in assets, forced liquidations. Something is coming and it ain't good. It's going to drive the fear trade. I think it's going to push the dollar up, and it's going to put pressure on the euro up very strongly, by the way, on today, and the dollar having a weak day. So it's not necessarily just yet. What do we still have in our scenario to happen? Another wee bounce that will be smaller than that bounce, which was smaller than that bounce, and then the magnetic attraction of the 22 line back again. That's what's awaiting for silver in my opinion and worldview. And we've been talking about this in the community, and I put them on defensive notice on a number of levels. This does not work out particularly well for my Bitcoin friends either, in my humble opinion, because this is going to be a flight into dollar. This will be a flight into dollar. Now, the head and shoulders is a slightly more tenuous, just because this structure as an inverted HVF could form. We're looking at about an 18.7 target on this pattern alone. So just if we just reference this, that on its own will point to about 18.735. Recognize there is a larger structure in play, but one could perform and the other could not. It doesn't mean because the one triggers that they all perform. That potential head and shoulder, which we're highlighting for you, with a flat right shoulder. That's ideally how you want it, less strong than the higher heights that were attained on the original left shoulder, which are actually not too far behind the Wall Street bet spike over there. Now, were the head and shoulder also to perform, that would be a very extreme deflationary event. It would be a buying opportunity for physical, in my mind, of great value. And I would jump right in, but you'd be looking around 13.3 to the downside. Remember, targets should typically be overrun. They should be taken out and run. So you should make it into the 13s and run the 13.4 targets and potentially downside. This doesn't point to quite the low of the event over here. That doesn't mean you couldn't run it, but it's not targeting down there. Geometrically, the target's on there. So one, you run down to 18.735. A bigger event means the head and shoulder performs, you run down to 13.3 and you get a bit of overrun. I don't think that necessarily means you make that new low. Who knows? It could be a hack event, sudden shortage of dollars. Russia and China stole all your dollar accounts and all your other currency accounts, and now everybody needs dollars. Help, help, help. No money, no ATMs. Oh dear, no food. Panic, panic, panic. Liquidate anything you can sell that you hold to feed the family. It would be high drama, potentially. That would be the big high drama, the 13 run. The 18 run would be a more moderated sell-off to the downside. What about that God market? So we've told you a little bit about what we've been scenario casting for silver. What about gold? And we probably should look at the gold-silver ratio as well. So is gold also going to run? Well, it would be very difficult for us to be super bearish on the silver market and not see the same concerns for gold. So if we are wrong, we are going to be absolutely 180 degrees wrong. And that's okay. That's what stops are for. You don't lose more money. You don't lose more money for being 100% wrong, not slightly wrong. You don't get that. You either make money or you don't. So for us, the invalidation here is 18.54. So again, on terrible news for the dollar today, with a lot of euro strength, and typically if the dollar is weak, which it was today, against our macro term view broadly, but because of that happening, you should have got a really good day for gold out of the gold USD. Man, the dollar was weak. No, this 1800 level has been absolutely an iceberging point. You have a water line there, which is the blue line over there at the 1800, and you can't hold for long. Note how spiky when you get above and how hard you're smashing down whenever you get that 1800 run down. Look at that. Down, bid absence, and then super grindy. This is how much time you've been able to spend. Down hard. Again, absence of bid. And there's always a reason. There's always a reason to fundamental. Oh, but the Fed said that. Hey, it should have buyers. There shouldn't be not-for-profit selling on super light markets either. This is a very low area compared to the amount of time that it's spent below the 1800 mark. You are going to get a smackdown. Look at this area over here. So it has been what we call iceberging above that level. And I'm also highlighting here in the red. Yep, let's go for the red over here, that this is very grindy. It is not typical bottoming behavior. That is continuation behavior like that. We also had a small inverted setup over there very early in the setup that did make target as well. Its target, oh wait, also the 1800 level. Isn't that interesting? Oh, we also have a touch here, 1680, a touch there, 1680, and in fact our low 2 had a super electric fence spike, chunk, dip and spike, also 1680. This level we've given you so many times on this channel, and we're reminding you about this again. This is a weak attempt to hold above the 1800, where most of the time you're hanging heavy underside the 1800. Most of the time you're hanging heavy underside the 1800 with a couple of skirmishes above the line, and you are there or thereabouts right now. What about that 1680? Well, let's pull that back into view. Join me and get a little bit more real estate on the screen, and we pull it in. That 1680 came from the big event, the fear. This was, remember, during this bull market phase, this was a key event that occurred, was the medical event that we will refer to, and it was absolutely key. Come on, reload that chart. It's pivoted back to silver. Thank you so much. Let's go back to gold, and let's get the 2-day on there. So why was that 1680 such a key level? Because of the 4 touches before you broke. Resistance, resistance, resistance. The biggest dip, and no, it's not a head and shoulders if it isn't at a secular low. It's 3 dips in the row where the 3rd dip is the deepest. An attempt there, 1680, attempt there, 1680, attempt there, 1680. Knock back 3 times. 1, 2. It's not at a secular low. You should not be counting this as a head and shoulders. People go, head and shoulders continuation. They are not. They're reversal patterns. You'll get whatever book that says that. Go to Charles Dow, the original technical analyst. Head and shoulders were reversals. They are not continuation patterns. There's other framings for this, including broadening structures like that. We've covered this in our material on a bull pole like that. That is a natural continuation. Of course, after all of that resistance at the 1680, you get support, 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 support. Touched, run, not closed below. Continuation pattern to the upside, and off you go. Blow off moments after the 1800. Look at the 1800 flag there, and then the blow off. That turned into fluff that you couldn't hold. That 1800 is a key level. That 1680 is a key level. We are calling for 1500, a number starting with 1 and 5 in it on the breakdown to the downside here. That is not going to be welcome, and it could be a very good buying opportunity for those that have hot cash. Cash is the hold until this comes. The triggering event is at the 1753. Fascinating that our 3rd and high and our 3rd low, almost perfectly giving us a midpoint in and around the 1800. There's a natural symmetry to this, guys. 1553 to be run, and again, remember, it can surpass that, but we would be closing on the short side. I don't assess this to be very good setup for upside. If we are wrong, you would get something like this. The 1854 is proof of that incorrect positioning, and then you will have an upside move. That would be how we be wrong. Always ask, how can we be wrong? There is, of course, a squeezy Japanesey going on here in terms of the price compression, just like I showed you on the silver. These markets are coiling for a crash, in my opinion, on balance of probabilities. But if we're wrong, they're coiling for a great up move. What you're not going to see is boring, low volatility price consolidation continuing for much longer. That is our distinct opinion. First impulse, boom. Second and third. Okay, good. That is my key warning to you on precious metals. Remember, if you want to become part of a scenario casting team of future price behavior, learning the value of technical analysis. We didn't wake up this morning and decide to be bears on precious metals. We've had key bullish scenarios that continue not to be adhered to and bearish ones that have. These structures build over an extended time. We have rules as to why we think it's bearish. You will learn that and more on a trading metamorphosis program with us. You need to have a call with someone. We need to speak to you, know you're a real person, that you have no crazy fantasies about wealth building, that you're going to be systemic, methodical, and recognize that slow dough is the big and the stay around dough. I'm Francis Hunt. I'm the market sniper. You have just seen why I am calling bear on gold and silver. There is much more. Subscribe below. We will be updating on why we think the dollar will reassert to bull despite the ECB and what happened today on the grand macro. And we also think our friends in crypto will be running into trouble. Go and subscribe on our Crypto Sniper, the Crypto Sniper channel as well. Thank you for watching. Give us a like and a share for more of this kind of content.